Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel, as always, joined by Joel Elconin and Dennis Dick. On today's show, we got some interesting stuff to talk about. We got another trade deal potentially, which is why we're up this morning. But we want to talk about the theme of today's show is to chase or not to chase. That is the question. That's what we're going to talk about pretty much with regards to every stock that comes up, because the theme of the market, it continues to be a buy the dip market. So we have that going on. We have earnings from Shopify and Aurora and Under Armour. Pot stocks in general were volatile yesterday, so we'll talk about those. Our guest today, as he joins us every Tuesday, is Nick Chahine, the author of Create Income with Option Spreads. He'll join us at 8:35. And Joel, give us the recap of what happened here overnight.
Green on the screen, Spencer. We're up 19 and a quarter, handles at 27.50. Levels on the upside, folks. High close of the move, 27.31. We'll keep an eye on that. And then also the high of the move, 27.37.75. Dennis, when we bring him on, he's going to tell us where they're going to be support is on a pullback. Crude, they came out with some January numbers, production lower than expected in January. Crude getting a pop up $1.20 at 53.60. Still kind of a 52 to 55 trading range. Gold in the green by $5.40 at 13.17.30. That's developing its own trading range of its own between 1,300 and 13 and a quarter. Silver up 8.5 cents at $15.77.1/2. Triple D, before you're going to tell us where to buy the dip yesterday, big congratulations. I gave it to you during the hour of power show yesterday. You're calling EA. You caught it, but now it's right back up, Dennis. And is this one you're going to be lamenting, say, oh, I shouldn't trade my short-term portfolio?
Yeah, I shouldn't trade your long-term portfolio. But, when you see a stock up 30% in a matter of 4 days because they launched a game, and yes, it looks like it's going to be a very successful launch, I just thought that's way overdone. And I thought, and I even said yesterday on the show, the pre-market show, when it was up $4 in the pre-market, I said, I think EA closes red. It did close red, but it didn't stay red for long because they announced that not only do they have 10 million viewers now are playing this game, they now have 25 million. That was announced after the bell, and that's why EA is right back up at 104.26. I did sell my EA at 105 yesterday, just ringing the register because too much, too fast. Yes, I guess the game is cool. I guess the game is, and obviously some upgrades have happened because of it. Price target raises. It's the whole reason the stock has come back, but I just think too much, too fast.
But isn't it a free game?
Yeah, I think they're all going to that model. They're going to have to start figuring it out.
How are they going to make money from it?
Well, if you go through, a lot of them can make money just from selling the stuff inside the games too. I mean, Activision Blizzard, and obviously a lot of them go the cartridges, but there's not lots of different ways they can do it. I mean, you think about Activision Blizzard, I think they had $4 billion in skins last year, which was selling stuff with inside the game.
That's right. You told me.
So, there's other ways too. I'm not in the gaming industry, so I can't tell you, but I'm sure there's a lot of other ways too. But right off the top of my head, I know selling the stuff within the games is the way they're making money. It's the same thing like the Candy Crush game. My mom is, addicted to that. She's right at the very top and plays it as they come out. But it's the selling the stuff in the games, and they'll sell stuff to get you an edge. My mom never buys the stuff, but I mean, a lot of people do. They want the edge, so you can get an extra hammer. Well, here's a buck, you can take out this level. So, and you've been stuck on this level for 2 days, and all of a sudden you're like, okay, I don't want to take it anymore. I'm sitting here for 2 days trying to beat the level. I can buy a couple hammers or something, and that'll take me and get me through this level. So that's really, I think the way it's moving is to where it's selling stuff with inside the game, little upgrades to get you through a difficult level.
All right. So what's
if anybody else in the chat plays these games, I don't play any of them. So So I can't tell you what else they're selling in the games, but if you do have stuff, let us know. I would imagine that's how they're going to be making money. And I think you see the ways it's successful of Fortnite, and now you have EA launching a very similar game, the free to play, everybody's involved, everybody's playing against each other. And from what I hear out of a buddy say, it's a lot of similarities overall. So, I mean, you're going to see the other ones probably doing the same thing, moving to this model. I don't think you're going to see Activision Blizzard just die on the vine because they're trying to sell physical games. It's all going, I think, to this free-to-play model. That's why it's not good for GameStop. Like, that's and we've talked about this for a while too. You think about how successful the video gaming industry has been in the last few years, and you look at GameStop with a 13% yield, and you think it's a good investment. But I mean, their model is selling the physical cartridges in the stores. So if it's all going free to play, what do you need a GameStop for? So that's the stock, and that I would say is under attack here from it. Where you see Activision Blizzard has definitely been under attack too, and they're going to report here after the bell. That's going to be very interesting. I still own my ATVI stock, and I'm probably going to stick with it because I think they'll figure it out. I think the skins, and I think long term are going to be okay there. I have full intentions to rebuy my EA stock too. All I'm trying to do was scalp some points, but it was looking good yesterday because I sold at 105, it was down at 97. Now it's back here at 104, so I'm not chasing it up here. And the question you posed off the bat, to chase or not to chase, in the case of EA, I'm not chasing.
And let's just take a quick look at the pre-market action. This is on an upgrade. Spencer, you want to give us the upgrade? Who did this and what they're saying about EA up $7.50?
No, there's no upgrade.
No upgrade.
No, there's no upgrade.
So this game, and we'll just go back in. I think we said it right off the hop. This Apex Legend game was announced. They had 10 million players in the first 2 days. Well, it's up to 25 million was announced last night. So they got way more players again. So this whole EA rally is all on this game. It's all on the game. This one game turned it all around. I mean, they had a disaster quarter, Fortnite eating their lunch, and all of a sudden they launched this game, which is to compete with Fortnite, and it looks like it is going to be serious competition for Fortnite. And you see EA and how much they want, competition for Fortnite, and a game that's going to, potentially compete with it and be successful competing with it. That's why you saw EA go from $74 after hours, obviously 78 low in the regular session on the 6th, all the way up to $107 yesterday, $106.95, all on the launch of that game. So when the users are going up, the game gets a pop.
Joel, maybe what you're referring to is yesterday. There were a couple of notes on EA from yesterday. Bank America.
Right.
Bank America.
It was yesterday.
Yeah,
there was a rating change yesterday, I think,
right?
Wasn't there?
Well, there's two. There's Bank America upgrading EA and to buy, and there's Buckingham downgrading them to neutral. Buckingham is always more speculative. It's so early in the game's life that to assume it automatically achieves the scale of a Fortnite is highly speculative at best. But that's what the market is taking it as. So,
Jimmy, they also say advertising within these games as well, and you got players like Ninja who is playing this new game. I mean, he's he's like the Michael Jordan of video games. So you get this Ninja involved, and unbelievable, the power that this guy's got in the gaming community. The blue-haired Ninja kid. I mean, unbelievable what he's done. I think somebody was telling me he's making almost $1 million a month just selling his feed so people can watch him play video games. That's how powerful. And then not talking sponsorships or anything. This kid is getting rich playing video games.
The blue-haired Ninja kid. That's a great way to put it.
Well, I don't know. It's unbelievable. How old is that kid? He's 23 or 24 years old, isn't he?
Yeah, something like that.
So maybe, Joel, I should be, pushing my boy who's 4 years old now to play video games. He could be the next Ninja.
Well, he could get a scholarship, maybe.
There's gotta be that. Oh, it's going that way for sure. And our buddy Pete there over at Barron's Rings, who obviously makes, a lot of the rings and championship rings for this, is a huge believer. He thinks every single high school team is going to have a video game, an esports team. So it's all going to be, it's serious. It's a serious thing. The esports. I know it sounds crazy that you're going to pay to watch people play a video game, but people do, and they're filling. We've talked about it before. They're filling up stadiums for this stuff.
Real quickly, this is a big move up 7 3/4 handles, knocking on the door at 105. I would keep an eye on yesterday's high. Yesterday's high is 106.95. And I saw a high up, two highs in the 107 handle. So I just use that as resistance. The longer it takes to get, in the 108 area, I look for this to be a little bit of a fade here, but it's a strong move overnight. ATVI, just bad. It just, whatever happens, it's bad news for them. We'll see what happens. Yeah, happened during the report. Closed on the low of the session yesterday. Got a little bit of a pop up, 54 cents, but I'm going to move.
They gave it love on fast money last night.
Oh, they did?
A little bit of a fast money pop. Yeah, as soon as they started giving it the love, they said there was some big option buyers, and I forget who it was, if it was Dan Nathan or somebody said, but they kind of thought a lot of the bad news is baked into this. So basically, same argument. If they do anything okay in this quarter, even remotely, like they may miss, but if they don't miss bad, the stock could even rally on a miss. If they miss bad, then it could probably go lower again. But I mean, this thing is down from $48 to $49 just because EA missed and Take-Two missed, and obviously the EA launch, that all of a sudden, feels like Activision Blizzard and Take-Two are falling behind EA now because now they have a Fortnite basically comparable. So it's going to be, and somebody else said in the chat, I mean, if they mention anything about, free-to-play game to compete with, this Legends game or to compete with Fortnite, that will explode the stock. So that is what I'd be listening for going forward, is if Activision Blizzard has anything like that in the works. If they do, if they say anything like that on the conference call, that would be what the stock would take off on.
All right, let's cover. There was a few other earnings reports last night and this morning. Let's get to those. S&Ps are
Let's
starting
stay in the gaming just for a second, because we've got other stuff and we're running. Sometimes we got to take some extra time and just make sure we get covered. Take-Two here was downgraded here today. And Take-Two is down $3. BMO downgrade to underperform. We know that's the equivalent of sell. The stock is going to take out its lows of the move here today, trading 91 or trading at 90.5 right now. Low of the move is 91.48. Again, the market wants to hear something about a new game, something to compete with Fortnite like EA did. And the longer these games, I bet they're all going to be working on it in a hurry here now. But until they figure that out, I mean, maybe it's going to be a difficult trade to the upside. And here's another analyst ganging up on it and knocking it down. And at one time, you always thought Take-Two was best of breed. I think EA is kind of getting that a little bit here now, although, and I wanted to mention on EA, I think EA is a fade here today, 105. I said it yesterday, and I think this is just a big pop on the gaming player is going to go up. It's going to continue to go up here. Are we going to pop at $8 every time, they get another 10 million players on that game? I think the easy money's been made on EA in the long side, so I'm a fader of that move too. Take-Two, I'm interested in actually buying this at a certain point, but right now you're taking out the lows on the move, and I always say when the stock's making new lows, you got to go. So I have no interest in getting in this yet, but it's on my radar. And maybe we make a double bottom, maybe we get a nice green candle. I'm gonna let the thing stop going down first. Maybe it's gonna be the Activision Blizzard earnings that somehow help it in the sympathy move, but Take-Two's already reported, so I highly doubt that. So I want to see, something, show me a green candle, show me some life. I'm not seeing any life there to go trying to pick a bottom here and Take-Two.
This ATVI thing, this ATVI earnings report today is going to be so interesting to me, because
it's going to be so interesting. And the conference call is maybe going to be more important.
You're right. So because even if they don't,
just because you see it get hit, if it gets hit on the earnings, that call, I'm going to listen to the call. That call is important. And if they say something, like I said, about any type of, competition or a new game coming out to compete with Apex Legends or to compete with Fortnite, that will explode the stock. They don't say anything.
Well, they're going
like
to. They're going to because they're going to get asked about it. They might not volunteer it in the statement, but they're going to get asked about it by an analyst.
Well, if they say we don't have anything like that in the works,
then good night. But no. But what I was going to say is it's obvious that the market is interpreting ATVI as having missed the boat, or at least for now on this type of trend. Now, everyone thinks obviously this is going to be a bad report. What happens when everybody gets on the same side of the seesaw? It gets too top. It gets too.
Well, and that's it.
It gets too top heavy.
To the short side. Or is everybody expecting it to bounce because everybody? It's like you can go even further into psychology. Maybe everybody else is, it's been beat up so much. Maybe everybody else is going to lean. It's getting bid up here this morning. Maybe it gets bid up into the report here today and rallies a buck or two ahead of it, just on speculation that it might not be as bad as everybody thinks. Then all of a sudden it's crowded to the long side. a lot of psychology behind this market, trying to figure
Too
out what the
much.
crap.
So then
is
how
doing.
do we go about playing this later throughout the day?
I actually like it long for a day trade today. I kind of like the Activision Blizzard long, just, lean on maybe yesterday's low or something, but selling it before the close. I don't want to hold it through the report. I'm too scared. So, and my long term, I'm holding through the report. But as a trade, I don't mind it here, 40, 40, 40, 50. Maybe get a run to the 41s. Maybe you can pick up a buck or something ahead of it. So I know there's some risk here, but if you don't hold it through the report, it's not like you're going to lose $5 on it. So I think I like it ahead of the report. Maybe long for today, it's already up 1%. But I think I would, if I had it on for a trade, I wouldn't want to hold it through the report.
Where did the founder and CEO of Activision Blizzard go to school?
I wonder.
Must be Michigan.
Must be Michigan.
You got it. Ding, 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 ding.
Says the guy with the Michigan shirt on right now.
Oh yeah, we gotta.
I wasn't gonna mention if we went to Notre Dame.
Exactly.
Or Michigan State. Wouldn't be mentioned if we went to State.
Okay,
All right.
S&Ps are still up 19 handles, 27 and a quarter.
We got a takeover here. So ELLI, which I haven't looked at for a while there. Allie Mae can take over $99.
Really?
Yeah. And it was halted. It's out of the halt, and it's already trading up $99.
Yep, Toma Bravo, and 99 is the share. Is the price?
Is it cash or is it stock?
Yeah, it's cash.
So why is it trading 99.20? These people get really excited and they have to pay more than the takeout price. I've never understood that. Like, they think there's going to be a better bid coming. Is that what it is? I mean, we saw that go in the really big bull markets, 2017 and the beginning of 2018. Even in 2016, we'd see something get taken over, and we'd see immediately trade above the takeover price because they speculating it's going to get a better price. And that rarely happens. So I don't know. I have no idea why it wants to trade up to 99.10, 99.20, but it's a story for that. For the most part, obviously, is over. It looks like it's going to be $99.
Yeah. Okay. All right. Well, we'll see. I'm getting a little bit of a premium in there. I just looked at Fannie Mae and Freddie Mac, and they're still just hanging out.
Symbol. They're not even trade on the exchange, so I don't even know.
OTC.
Yeah, they're OTC.
Symbol on Fannie Mae now.
I wrote an article yesterday about that. So it looks like the conservatorship may be coming to an end at some point soon, and so there's like 18 different share classes for each of those companies, and the
government bailouts and
right, and the vast majority of them saw like 1,000% month-over-month volume increases in January from December. So there's a lot. Some people are paying attention, and these are preferred. It's common, it's preferred, it's everything, and they all saw massive volume increases in January. So if that's a story you pay attention to, which they do have like cult-like followings, those two stocks, even though they're OTC. Because of the conservatorship, and that may be coming to an end soon. So the market is definitely excited for that. But speaking of Fannie and Freddie,
do you know who was big for? I think has a big stake or had a big stake and was pushing for this, the conservatorship to be released. Wasn't Ackman in this thing for a while? It was one of the big. There's a big activist behind this. This has been going on for years. But the stocks, they're both two. Fannie Mae is at 242. That's flat, and Freddie Mac's at the same area. So when if that decision comes, a lot of people are expecting this really to take off. But it seems like every time that pop happens, it sold. Probably the biggest pop was in 17 when it got to just over $5. But I don't know. They're not penny stocks, but until that news, they'll have a lot of activity when and if that news ever comes out. Pershing Square, Griffin 11 says, owns a big piece of both of them.
That's Ackman. There we go. All right.
Thank you, Griffin.
Let's go.
That means I don't want to own them.
What?
Just kidding.
I didn't hear you
He
say.
said that means he doesn't want to own them.
I don't like owning Ackman stocks.
All right, well, let's go to the earnings from yesterday. Let's start with Chegg, CHGG. It is among my top gainers of the morning. Their Q4 EPS from yesterday, 25 cents versus a 21-cent estimate. Sales, 95.6 versus 91.6 million dollars. So beats on both the top and bottom line in the Q4. The Q1 guidance, the sales guidance they gave was higher than estimates.
Up 10% here in the pre-market. It's a nice lift. What does Chegg do? Do we know what Chegg does?
Top of my head, they're a software company.
I'm looking it up. I'm gonna go look it up. What's the top of your head?
Oh no, I'm wrong. I said
it looks like an online.
No.
Store.
It's the textbook company. That's what they do. It's like the textbook.
It's an online textbook store.
Yeah, it's
You
like,
gotta be kidding me.
I'm reserving all comments here. This feels like 1999 all over again. I'm leaving it at that. The stock's making new highs. I'm not shorting it because I don't like stock making new highs, but I'm not buying any online textbook store, especially in my long-term portfolio. As a trade, you can put on anything. I saw what happened.
The one thing you're forgetting. The
online bookstore became Amazon. So
the one thing you're forgetting.
Now you're buying it. Just went from a seller to a buyer.
Dennis, the one thing you're forgetting.
Online bookstore became Amazon. So online textbook store maybe is next to Amazon. Maybe that's what the market's speculating.
Dennis, I don't think you realize.
Hunter says great service, so maybe I shouldn't make fun.
I don't think you realize how expensive higher education is in America. It's insanely expensive. So. People,
they get cheaper.
This is what they're paying for. This is what they're paying for.
I get
it. Did some good comments. I couldn't have gotten through college without it. Says one of our.
Everybody's okay. I take it all back. It's being used.
Chegg is useful for college students.
Gosh,
boom, boom, boom.
I haven't been in college in 20 years, so maybe that's why I didn't know really about Chegg. So things change. Back in my day, I had to go to the physical bookstore and buy the physical book. So I know a lot of things are different here now, online books, whatever it is, but I had to always go and buy the physical, and they were expensive. I mean, you drop like, what were your books back in the day, Joel? I'd drop like $100 on every textbook.
You know what you do? If you wait till like 2 or 3 weeks after classes started, they're a lot cheaper.
Why?
I don't know.
Yeah,
I was waiting.
You're supposed to
buy
do that.
For the kids that are dropping out.
You're supposed to do that. You're supposed to wait a few weeks and find out if you actually need them. If you don't,
what you did, Spencer?
What?
So you didn't buy all your textbooks?
No, of course not. Well, I did. I did my freshman year, and then I learned the hard way that that's not the way to do it. You're supposed to wait until am I really going to need this book?
Yeah,
am I really going to need this?
Is the prof using the textbook, or is he just going to hand us all his notes every week and is going to put his notes? Because then I don't need to buy the textbook.
Exactly.
$38.90.
Go to class, though, so
Thank you, Joel. Thank you, Joel.
$38.90 is your after hours high, just hanging out in the 38 handle. So there's a target for you on the upside. On the downside, if this thing goes into reverse, I have no idea where it's going to stop. The top of yesterday's range was way down at 35.47. So it's not, I mean, it's up here. It's pulled off the 38.90, but no one's whooping it yet. So we'll see what happens off the open.
Let's go to a company that I do understand, and that's Under Armour, UA. It reported earnings here this morning, and it is getting a lift here. Spencer, Israel, how did they do?
Yep, UA and UAA. Remember, there's two tickers here. UAA is the more active of the two, and they had some guidance this morning. They reaffirmed their fiscal year guidance that they had previously given, the EPS guidance and their sales guidance, both reaffirmed. They had earnings? Yeah, here we go. Q4 adjusted EPS 9 cents versus 6 cent estimate. Sales 1.4 versus 1.39 billion. So EPS beat and a slight beat on the sales, and as I mentioned, their reaffirmed guidance.
I like the I have a couple Under Armour shirts, and I wear them for when I play hockey, and if I do some running, which I'm still trying to do, by the way. And they're pretty awesome shirts, and they're not super expensive either. So I do like the stuff, but it's always been a multiple thing for me. It's always had a higher valuation. Even obviously the earnings have been depressed here as of late, so that makes the valuation look even worse. Retail earnings season is going to get kickstarted here soon. We're coming into it's always towards the end of earnings season where you start getting the retailers.
Next week, I think.
like next week they start kicking off. So we're getting a little hint of, what's looking like from retail a little bit here. It's a nice lift for Under Armour. I'm not getting that excited. I mean, $20 is probably going to be major resistance. It's not like it's tearing it up here, and it was up a little bit more earlier. You can go UA or UAA, pick your poison, but I'm looking at the UA chart right now, and I just think it's overhead resistance around 20 probably, big psychological level.
Yeah, I mean, there was a pair of highs in 1953 and 1956. We were holding that. So if it holds that, definitely a chance here to move higher. $20. Dennis mentioned 2008. That was the high on a gap down day. So some sellers there at 20, and then you get into some open area. And then I looked at UAA, and 2150 has a double top here. So if you want to go, I have one pair of Under Armour shorts, and really.
Do you like them?
No, I don't.
I tell you something though. I went in, and my wife is a big fan of Lululemon. We just got one in Windsor here, and she's went in there and she's bought stuff. And I'm like, I walked in that store with her. I was like, I almost need to ban her from coming in this store. I picked up a pair of pants, like a shorts, like to run in. They're $100. It's like, I can't believe this many. But she's like, do you wear them? They feel so awesome. They're $100 for a pair of shorts.
Wait, where
130 for the pair of pants.
Where have you been for the past 5 years?
Oh, I know. I never went in one. I just see everybody in there. I never had the guts to go in one because I'm cheap. I went in there for the first time actually in the store and looked, and I was like, oh, these look like pretty nice pants. $130. My jaw hit the floor and I walked out of the store. That's crazy. People pay that, but they're paying it. So I guess that's why the stock is $150, because if you can sell a pair of pants for $130, just like if you can sell a cup of coffee for $5, you're doing something right.
And Dennis went over to the Duluth Trading Company, or Duluth Holdings, and
I like Duluth stuff.
But I mean, Lulu, that stock's been a beast. I haven't looked at that in a long time. Getting a little pop, well, not quite an all-time high. This is probably getting a pop off the Under Armour here, but recent high, the move in Lululemon comes in at 152.18, and we're only about 70 cents away from that.
Shopify.
Have you ever been to one of those stores, Spencer? Those Lululemons? Have you bought anything from there?
Yeah, I walked in one once and I walked around.
What, did you buy anything? You did the same thing.
No, I'm not going to buy anything. What are you, crazy?
$130 pair of pants. People are buying stuff though. I'm worried. My wife's going to start shopping there regularly.
Yeah.
I'm like, I'm going to start trading twice as hard to pay for these Lululemon pants.
Yeah, no.
How about Shopify?
Shopify Q4 adjusted EPS this morning, 26 cents versus a 20-cent estimate. Sales 343 versus $327 million. So beats on both the Q4 EPS and sales. The Q1 guidance that they gave, the sales guidance was in line, and the fiscal year sales guidance was also in line.
Getting hit, it's the kind of stock I think they'll buy the dip on. And I'm not going to come in. You don't want to come in that first, you wait for it to flush. It always seems to flush in the first 20 minutes. And let's see where it flushes to. Then if you get some life maybe after the 10 a.m., the John Dodson turn, we'll call it, because he always talks about it too. You get a 10 a.m. turn, maybe that's where you start to, look into it. But again, we're another 160, I would think. But these things can really wash out sometimes. There's no liquidity in them off the hop. Sometimes these things can open 166 and be at 160 in a heartbeat. So you got to be really careful, especially on some of these thinner ones. So Shopify will be thin after the opening. It will be wild. So I'll probably sit out the first half hour, but I'm still interested in buying the dip on this. Maybe not. Sometimes it's better to wait even a day or two, because sometimes it comes back and re-challenges it a bit too, as opposed to just jumping in. But it seems like in this market, after 3 or 4 days, the stocks start to show some life, like Spotify, which isn't Shopify, but it rhymes with that, and we'll go with it. Spotify took 3 days and it's bounced back from its losses. So not that they're the same company at all. They just sound alike, but they're both little love tech stocks here. I think in 3-4 days, I think you could see a bounce here. I'm just going to wait for the flush out though.
Yeah, I think you might have had your flush out. You might have missed your opportunity today, Dennis. It traded down to 160.41. So it already went there. So, but now you're on the rebound here. You're $5.50 ahead of it. 165.5 is where you're currently trading. So when I see this kind of formation here with the spike low, man, I want to see it get back down there. And I'd even be sitting out ahead of it. When they tried another dip, there were buyers at 160, 170 here. So, and if you're a pattern trader here in the 15-minute, you're kind of getting a little bit of a triangle. But to me, I think you're going to have a hard time. Who knows? Anything could happen. Get a flush out off the open. But 160, 160.41 is your pre-market support.
Imbalanced land, Johnson Johnson, 87,000 to sell. That's of note. It's actually trading up 70 cents, but that's a big selling bounce for J&J. Some of your defensive stocks are getting some selling bounce. Actually, there's a few selling bounces. Pfizer, 112,000 to sell. That's significant. Bank of America, 90,000 to sell. That's not that big for Bank of America. Square is 44,000 to buy. Square is starting to show a lot of life here now. We talked about the 70. It's just there's buyers down there at 70. Now you have a 2-day move here. I don't know if you're going to get another chance down there again. It's giving you multiple chances at 70. I've never taken those chances, which I should have, because I've been talking it up here for the last week on the show, and I don't own it. I wish I did. I wish I would have bought the 70 last time. I don't know. I think I'm not going to get another chance, because I think if it did come back there now, I'd probably buy it and it'd probably go down. So, if they give you 4, 5, 6 chances, then it's probably not the low. I think if it went back to 70 now, I'd probably actually be nervous. So we set off the bat not to chase, but this is one I almost feel like chasing to a certain extent. If we got a little maybe pull back maybe to yesterday's low or something, maybe get interested. But Square just looks like it's ready to go.
I did had a nice day yesterday, getting back all those losses. Remember, you got the downgrade. I can't remember who that was from. They whooped it up pretty good that day, but the buy the dip, they took it from 76.22. Is this the same day down to 68.56? Holy mackerel! And just turned around since that day.
That was from
yesterday. Yeah, 75.88 to your high from yesterday. The high on the day before that downgrade was 77.01 if you're looking for another target in SQ. Chat's buzzing about ACB here. They want to hear about it, Spencer. What do you have on it?
Of course they do. It's a pot stock, and we all like to hear about pot stocks. So ACB, Aurora Cannabis, had their earnings pretty late. I feel like after the bell, it was like after 5 o'clock yesterday when I saw the first headline. So let's see what I got here. Their revenue more than doubled on a quarter-over-quarter basis. Let's see. Their Q2 loss, $237 million versus $7 million gain in the same quarter last year. That's accretive to some deals they've made. Sales, $54 million, up from $11 million in the same quarter last year. So some dramatic year-over-year sales increase there. And they reiterated previously given guidance as far as the amount of product they will have available for sale in their Q4, which is the June quarter.
ACB, this is the only pot stock I do have in my portfolio there. It's kind of in the swing trade, not the long term, but not the one that I'm going to just trade in and out of. I'm trying not to look at it that much. Only thing I will say is the pot stocks are a little bit broken here right now. Obviously, we've seen significant. The leader, probably Canopy Growth, has lost about 10 points here quietly in the last 6 days. So pot stocks are out of favor here right now, but we know it seems like eventually just takes a headline or it takes an analyst or something, it'll turn them around. So I think they eventually turn it around here again. I don't think they're done. I mean, valuation has always been an issue here. That's why it's not in my long-term portfolio. That's for all of them, because valuation is obviously high on all these pot stocks. But I think, even Afri on this pullback now, it's given from over $11 back to in the 8 handle here. I think eventually there's going to be some buyers emerging to buy the dips in some of these pot stocks.
For this one, you did trade lower off the initial report. You traded down to 680. You're not just bolting out of there here, so I would use that pre-market low as your first support point. After that, I mean, I'm seeing all these lows, 660, 655, 676, 681. So just seems to be a lot of support here under $7. The major support, we were down at 6 a few days ago. I don't know. This seems like it's just kind of going to just grind here between 680 and 710. Your closing price from yesterday, you want to see it above that for a chance to rally. Yesterday's closing price was where did we close at? 717. So you're not too far from being unchanged on the day. 8:35. Spencer, are you dialing up our guest?
I am dialing up our guest, Nick Chahine, create income with option spreads and sell spreads Are
Good
his
morning.
sites. Good morning, Nick. How's it going?
Pretty good. Enjoying the ticks here. They're green and everybody's happy. The government's open. Good day.
The government's open for now. For now.
Yeah. Well,
4
it's up
more
to them.
days? What is it? 4
What is
more
it?
days?
The rest of the
How many days do we have?
through this week? What is it? When's the deadline again?
Yeah, I
coming
forget.
up?
This is the second. This is the next
Thursday.
deadline. They
Thursday.
reopen, then they shut down. Then they're just going to reopen, and they're going to shut down. Is that the way it's going to be?
I have no idea. But, politicians, I leave it up to them. They never, I'm never surprised as to what they say and do. This happened when they threw us off the fiscal cliffs that one time. So I was like, I couldn't believe it then. So, yeah, but here we are. We are having a happy morning based on a relief rally. Usually those are shortable, but since there are a couple more headlines to go, they haven't signed it. So we'll probably have a little party after they actually sign it. But this is a relief rally that something bad didn't happen, as opposed to here's a reason to chase the rally. So I would wait to see what happens this morning before I go long. If I'm long, I'm happy.
Wait, so
Spencer Israel posed this question as we started the show today: to chase or not to chase? That is the question.
that was
here.
Joel's question, actually. I just stole it from Joel, but that's okay.
Okay, so Joel.
Well, actually, I want to give someone in the chat too, because I think they no. Before I had that in the docket like 7 o'clock, but I don't. Someone else in the chat. I don't know if it was go for the W, but anyways, Nick, go ahead. You got the S&P chart up.
Yeah.
Give us.
So,
tell us what you're looking at.
Last night, I drew a pattern in red, tiny little pattern based on a 5-minute chart, and apparently they priced it all out overnight, and it almost traced out exactly how I drew it. They even dipped exactly where I did it. Maybe lucky, maybe not. But then I've also drawn a white line, which can carry it a lot higher, but it will have some dips. Yesterday, I had a debate with a couple of friends of mine who are really good technicians, and they expected a dip in the SPY, as did most of the folks on CNBC, including the fast traders. And I just didn't see it in the charts. And I thought to myself, this is going to be an event, like a headline of sorts. And this week we have a lot of headlines. And I think Powell speaks today. So we have that. Whatever comes out of his mouth will move markets.
For sure.
Also, we have the actual signing of this bill they passed, or they agreed to pass, the budget. And we also have some news from China. I don't anticipate any hiccups from China because I think everybody has a lot on the line. China is suffering. I don't care what the experts say. If I have a business and most of my clients are not coming my way anymore and they are looking to leave, which is what's going on there. If you have a business and you're looking to outsource your product, would you go look at China right now? You wouldn't, most likely. So they have that flow not going there. I don't care what the metrics are. I don't care if they're an autocracy or not, and they can, sit out Trump or not. They are hurting, and the damage that's being done now is long lasting. So they will come to term. It will be something boring. I don't know what it will be, but they'll come to term.
Do we get a rally on that, or is it just too much expected now that we're going to be coming to an agreement? Are we going to get a huge rally?
Well, if we will have a deal in China, the headline, this pop here will be tiny compared to
so you think it could propel us we're going to get a deal, like you said. Listen, we're going to get a deal.
Nothing is ever priced in. And remember the 4-letter word, the Greece debacle back then, the deal in Greece. How many times did we celebrate the deal in Greece? 9, 10 times?
We were celebrating more than there was no deal.
I remember because I was short.
That's true.
So it was painful. And every time somebody comes out with, hey, we think we have a deal, Sora Cyprus, whatever his name was at the time, comes and saves the day and then ditches them. So they will celebrate it until it actually happens. And then when it happens, once that happens, then you can actually trade the chart with sanity. But until then, every headline will move the markets short term, just like earnings. It's a short term move, whether it's right or not. Just don't fight the tape. You'll be happier.
We're on the line with Nick Chahine. He's the author of Create Income with Option Spread. Nick, I got a confession here to make. I hope you're sitting down. Are you sitting down?
Always sitting down. What's up?
I did. I've done 2 credit call spreads.
What?
Yeah. Yeah.
Today? Last night?
No. I did one. I've been telling my, I'm sick of being, on the losing end, even of the weeklies or the following weeklies. So I said, you know what, I'm gonna do what Nick's been preaching for a long time. And the first one I did, it was a weekly on canopy growth. It was nothing major, but I just did not like the chart after it, it made that high last week. So I just did a small one yesterday. But the real teaser I did yesterday, and I'm glad I didn't do the Wednesdays. I just did a small credit call spread in the spider, and it was around that area the whole day. And they actually let me cover it in the after hours better than when it closed. But my question for you is, how come when I'm long options, they just suck the time out of it right away? But when I'm short them, I'm short of credit. It's just like, okay. Okay, it's time to take the premium out. Time to take the premium out. And I'll tell you another thing.
It's called selective perception.
I was totally wrong where I put this. I mean, overall with the trade, and I ended up making money on it. So
here's the thing.
Exciting. Okay. Go ahead.
So every time you pick up an options book, I bet you in the first paragraph, there'll be a reference to 80% of options expire worthless. Or some high number. I don't know what the number is. First of all, that's bunk, because it could be part of spreads where 50-50 and you still win. So, but it is a high number. So why on earth would you want to be buying them? That's my question. It was like an epiphany years and years and years ago. I was like, wait a minute, I want to be selling these things. Yeah. So let me find out where its price is not going. So, and let me sell the risk there. I'll tell you one thing. Good job, by the way. And I'll give you free advice. Don't short the pot stocks. That is not the place to put credit call spreads. You got lucky. So
there's major risk in shorting those things.
Yeah. So if you look on the chart I just posted this morning, you can probably have a clue where you can sell credit call spreads, even at this level. If you look left, we had a ledge that was consolidation somewhere around February, that ended around February 6th. So that is natural resistance. But 2732-ish, 2731-ish, something like that in the ES. So that would be a place to, okay, maybe I can take a stab, especially if you're long. So Tesla, I did the same thing in Tesla. Tesla paid my bills for the last few months. Easy peasy. Every dip, I sell credit put spread and I sell a credit call spread above a little bit. I even did a 4-to-1. So it's not an iron condor where I sold 4 times the puts versus as many calls. And believe it or not, I can even do naked puts in Tesla selectively out in time. And those are easy wins if you're willing to buy the stock. Now, selling naked puts in near all-time high is really dangerous. But if you're willing to own the stock, I don't like the Tesla stock for me. I like how much people like it. So when everybody hated it, I still knew there were some closet lovers of Tesla. So I was like, okay, these guys and gals are going to come out. So I sold some. So yeah, good job on the credit spreads. And I believe that selling spreads is way better than buying them.
Talk about pinning, Nick. I was explaining a little bit of this and strategies around the pin. But basically, a lot of people believe that there's market makers that are intentionally trying to drive prices so I can go. I'm arguing it's just the natural market mechanics that cause stocks to pin. Because if you're like long calls, you're going to be selling the stock if it's a few minutes before the close. If you can't get out of the option, you'll be wanting to hedge yourself and shorting the stock against those calls if you're a market maker. So when the stock goes above the strike price with open interest, there's a natural tendency to push it back down. When the stock is below it, you might be covering in, or it could be on the other side, and it's a natural tendency to push it back up. So basically, when you have a huge open interest at a specific strike price, there tends to be a natural gravitation towards that price. I know you play this.
You know why there is a natural gravitational pull to it?
Yeah,
because people make it believe, hey, unusual options activity. Everybody piles into it, and then the market maker will slam you. So the market is rigged. If you don't believe that, then you're at a disadvantage right from the
Well, why is it rigged? It's just the natural.
Right. No, the way it's rigged, it's not like it's cheating. It's rigged to put us at a disadvantage to the market makers. And they make the freaking market. They can make it do whatever it wants. I shared a specific SPX leg a few weeks ago, and I said, I can't believe people are not talking about it. It was like an order of 250, 260 million profit in a couple of days, and nobody talked about it. It was I can't remember the specific spot of it. I should dig it up. I did a video about it. But anyway, so there are a lot of instances where there's clear proof that happens. but it's nothing bad. If you know it's there, then you can use it to your advantage.
Tell us how you trade around it.
Well, you just don't fight the market makers. So, and
you see, and some of them stick out like a sore thumb. I know when you're looking at options, you probably see a strike with a huge open interest, and you see the stock 25 cents away from it, with an hour to go. What are you doing?
I don't buy it, because if it's going to expire, I'm going to buy it. It's going to come to it, and I'm going to make no money. And so there's no reason to go beyond it.
Why not? But why not? And I'll tell you, I used to trade options, and I don't trade options like hardly at all anymore because I'm an equities guy. But I will be still, I still, use options interest sometimes, the open interest, to look at, potential equity trades around it. Because if you got a stock like it's got a huge open interest of 55, and the stock's 55 and a quarter with 10 minutes to go, I know there's going to be a natural tendency for that stock to usually push towards that 55. So I might short the stock.
Right.
As opposed
but
to buying.
That's different than chasing a call option that's out there.
Oh,
so,
yeah.
Okay, so you just said what I said.
I'm saying, why not? Why not?
So I'll give you a free piece of advice here, that if you see it on TV saying unusual options activity, they kill me when they say they bought the 55 call in 55,000 batches or whatever. It's like, okay, so there was no seller on the other side. It was an immaculate buy. It just materialized out of nowhere. Who's to say that the seller is not smarter than the buyer? So if I sell that call, I'm bearish that call, and I'm taking just as big a risk as the buyer. So unless I know the buyer and the seller, what the heck am I going to do with this news? It means nothing to me unless I know something about the buyer and the seller. It kills me when they say it that way, and they never mention the other side. There's always another side. Don't assume you're right and just blindly.
We don't know the reasons behind any of these trades.
Exactly.
Obviously, when they say that there's a big okay, we had a big and they're speculating that somebody's gambling. There could be hedging. There could be so many different reasons for somebody to take a big options trade. We don't know the reasons behind it. We don't know they have not every options trader has inside information.
Exactly. And the more I trade, I watch the markets and I watch the news, the more I believe now what I didn't believe then. Back then, I was on the other side of this argument. I tell you, turn off the news, trade charts and P&Ls, profit and loss statements. You would do better. That's my opinion. You would filter out all the noise. You would know where the patterns are. Like you could say, oh, well, we didn't see this S&P rally coming. You could have, and I'll tell you why, because there's an inverse head and shoulder pattern that triggered 2713. And if I didn't hear the news and I see the news and I saw a tick above 2713, I could have said there's an inverse head and shoulders pattern in the S&P ES that has, I'm trying to calculate it by 20 points-ish. And so I would have gone long above 2713, but I'm not a futures trader. But the futures traders would have probably gone long, or somebody that swings trades the S&P tightly using the futures based on technicals. So don't listen to the news unless they're talking about a specific stock's earnings or whatever. So trade the P&L. So when they do the earnings, look at the company and you read, okay, I understand the parameters of this company. So overall, I can buy it at this level because it's a good deal. I don't want to buy it at that level because it's a bad deal. And then I'll trade a chart inside the knowledge I have about this. So that's noise. Everything else is noise. Don't follow the hype, and definitely don't follow blindly the unusual options activity, because I can guarantee you the Nigerians already took the position, and they're probably going to be selling you, not intentionally, but they're going to be selling out while you're buying. So you're basically buying their profits.
Great question. And we went on this conversation in detail in the chat yesterday, and I don't know if you have any thoughts on it, but I'm just saying a strategy that I used to use when I trade options. I know this isn't your style because you don't usually trade. Do you trade the stock against your option positions ever?
Which one?
No, I'm saying when you have an open options position, do you ever trade the stock against it too, instead of
not
like selling the call flat, like your long calls? Do you ever sell the stock short against your call to hedge yourself? You usually just flat out are trading the options themselves.
I trade the options every once in a while. I get put a stock that happened last year, but nothing intentionally. But I do not recommend it. I do write it up. So these days I have a lot of people that like to do buy writes, for example. So if they own the stock, they'd like to sell calls against it, or they'd like to buy the stock and the intention of selling calls against it, or even buy calls to sell calls against them covered. So That's kind of the same strategy there. So I do share it. So I know the metrics around it, but I
Okay,
don't.
so I gave an example, and this is more of a market making thing than a trading thing. But when I used to trade options in the early 2000s, and it still can be done, is if I had something, long that I just happen to have, and sometimes I would actually buy options like on the SPY, I would buy options for like a penny with like 10 minutes to go in the day, take them through. And let's say I had like the strike at 272.50 or something, or 270. I'm just looking with where the SPY is right now. And SPY closes 272.45. Well, if I had the penny options, I could throw out 272.60 short on the stock after hours and sometimes get done. And what I would do is I would immediately exercise my call and make the 10 cents. So because the options don't expire right at 4 o'clock, they expire on Friday. They used to expire on Saturday, but then they do expire on Friday. But some brokers will let you exercise until 4:30. Some back in the day used to actually let you exercise till 5:30. So I basically had a free window where I could actually try to make, an option that is technically worthless pay, because if I don't do anything, it's expiring worthless, but it's because it's 5 cents out of the money at 4 o'clock. But if I get executed at 4:10, 10 cents higher, I can exercise that option. So the person probably on Monday who I exercised on the other side gets that and probably scratching their head, why did he exercise this? It's because I got short, the stock. So I was able to make the free 10 cents with that, penny option that I had. So I was just saying it's not firm that, just because something expires out of the money that you won't get exercised. Am I correct?
You are correct, and we're at a disadvantage that way. Most retail investors. I got caught in something like this years ago. Where like, wait, how did this happen? I couldn't have done what happened to me. Let's put it that way. At the time, I forget what it was. It was Suncor. So I woke up owning 1,000 or 2,000 shares of Suncor. Luckily, the stock was up $1 or $2. So
it worked out.
It worked out great because I kept my premium for selling the puts, and then I ended up selling the stock in the morning. But yes, there are things that happen after hours that I don't think I can do, but happen to me. So I rarely let anything expire for maximum gains. I usually buy it back.
You buy it back to minimize that risk.
I don't eliminate the risk completely. Yesterday, I was short the 2675 put of the SPX that expired yesterday. There's a contract that expires yesterday. So I had sold the put spread for $1.10 when markets were having a tizzy on Friday. And I was like, I'm going to hold it overnight and see what happens. That's not my typical way of trading, but I had a good hunch about it. And it wasn't a big position. So middle of the puts came down to be 5 cents. So I bought back the short leg just in case some shenanigans happen. So it's 5 cents. It cost me money to close it, but it was a good size win. And why would I leave 5 cent risk open? So I usually pay it to close it out. Just to avoid the one day they would actually have something fantastic happen and I'd be out thousands because I wanted to save 5 cents.
Funny things can happen after hours. So just, if you're close, all I'm going to say is if it's close, if it's $2-3 out of the money, you don't have to worry about it. But when they expire like a penny or two out of the money, some funny things can happen. You just got to be somewhat careful. With the ones that are expiring close, that's why you cover them in to minimize or eliminate that risk. Okay.
So top tip this week, the SPX, this is a monthly expiration. The SPX has 2 contracts on Friday. One is AM settled and one is PM settled. Huge difference between the two. The AM settled settles at the open. And I give you another tip here. It's not the opening tick. It's what they deem is the opening tick. Sometimes it's 20 points away. So don't bank about it being the opening tick. And I put in quotes, it's whenever most equities open that are in the index. I don't know what that means. So there's the AM settled contract you cannot trade on Friday. So you're at the mercy of the opening tick, but sometimes that's a good thing because if the market opens fine and then collapses, then you're good because they draw the finish line at the open. The other one trades all day and how it closes determines if you win or lose on the weekly contract.
All right, we've been on the line with Nick Chahine, Create Income with Option Spreads. He's our options guru. Nick, as always, thanks for the time, and we'll talk to you later.
Good show. Thank you.
All right. Joel, what's the word here in the S&Ps?
Not much, man. We are really, really tight here. Still up 19.25, 27.50. Your pre-market highs 27.30 and a quarter. 6-day close, high close of the move, 27.31. So we are opening into resistance, but really just a very, very quiet pre-market session here so far. So let's move on. I saw some ratings changes. I don't know if we did all the reports. Where do you want to go next?
I want to go to Gilead. I feel like we used to do a lot more drug news on this show. We don't talk the biotechs and the drug trials as much as we used to, it feels like. But Gilead had some data they released after the close yesterday. Their top line data for the phase 3 study of a drug to I'm not going to try to pronounce that. But the point is, the drug did not meet their primary endpoint in the phase 3 study. They're getting a couple of downgrades this morning in reaction to that. Wells Fargo and Citigroup both downgrading Gilead to neutral here. And but that was from yesterday's drug news.
We're trading down. We're trading down in the pre-market here. A buck for each of the downgrade, down 212 here. They really whooped it up on this one. 63.40 is your pre-market low. That is a big move for the stock. You're now back up at 65.5. What I'd like to see, the price action I'd be interested in here is, will this be filling the gap? You had a gap up day, still ended in a red candle. The low of that gap update was 65.14. That is coming into play into yesterday's session, but your support under that to fill the gap comes in at 64.01. So keeping an eye on 65.14. Dennis, you still hanging around in this one? I know you were.
And what stock?
Gilead?
Long gone. Sold the pop when it had that. What was it, like 2 years ago? I had it in my long-term portfolio. I went from like 75 to like 85, or from like 65 to 85 in like a couple of weeks. What was the news back then? There was some catalyst, and I was like, "This is my out." I'm like, "This is my chance to get the hell out of this dog." Oh, it was when they bought Kite, wasn't it? Was it Gilead bought Kite, wasn't it? I get the two confused. They bought Kite, or they bought who was the other one?
Juno.
It was Kite and
Juno. Right.
And Juno. Which one did they? They bought Kite, didn't they? Who bought? Because one bought Juno. I thought Celgene bought Juno.
Yes,
Gilead bought
Celgene
Kite.
bought
Am
Juno.
I right?
Yes, you are correct. Celgene did buy Juno.
And Gilead bought Kite. And when Gilead bought Kite, it got that ridiculous like $12 pop off it. And I was like, they're paying a huge premium. Yeah, they wanted growth, some growth, but they're paying a huge premium for it. I'm like, this is ridiculous. Sold the stock. And it turned out to be near the highs, because I think I sold like $85. And it came back down over the course of the next little while. And obviously now it's down 65. So glad I got the hell out of that one.
Just out of favor, Spencer, you mentioned that, we don't talk, there just really hasn't been that much news in these stocks as far as good trials and everything. So really, I think that's the main reason for it. And I don't know, we haven't talked Biogen or Amgen or any of those stocks. It just, they had their run and just been kind of just underperforming the market on the whole.
Other ratings.
All the biotechs have underperformed, and I just think there's still pressure there because there's drug pricing issues here. You've got trials obviously disappointed in the case of Gilead here. Valuations have always been okay, and I do own some biotechs. Obviously, I've lightened up as of recently because Celgene got taken over, and there's been some other reasons. But I still think long term you're okay there, but I'm somewhat cautious with just any drug stocks right now, just because of I think it's still on the agenda there to try to do something with drug pricing, and that's not good news for them.
Under Armour just went red here, down 20 cents at 18.95. So taking out
Top and drop.
It's gone parabolic here the past 10 minutes or so. 10 to 15 minutes.
Jesus. Yeah. Wow. 2020. And you just had a spike down here. I don't know if there's a conference call going on or what, but not liking the report. And that's coinciding here with a little fade here in the S&Ps as well. Still up 17, 18 handles at 27, 26 and a quarter. We're right here at the 9 o'clock hour. Spencer, you want to wrap things up and preview?
Sure.
Wednesday show.
Just a couple quick ratings to note aside from the Gilead one. Cisco catching a downgrade here from Morgan Stanley to their version of neutral, which is equal weight. Take Two. I don't remember if we mentioned that downgrade at BMO Capital to underperform this morning. and what was it? Fastenal downgrade at KeyBank to neutral. Those were the ones that caught my eye. As far as
what about
ratings,
Cisco? We haven't talked Cisco in a long time. It's had a nice comeback from the lows, got down to $40 in December. It's almost back up and gotten the entire losses from December back here up near 48. Now it catches a downgrade. What are your thoughts, Cisco? Here it's always later in the earnings season, so it's been out for a couple of weeks. What are your thoughts, CSCO? I know it's a Kramer favorite.
Yeah, I mean, I'd be trying to. I don't even know if I could say
Cisco,
I wanted to buy this in a pullback. I'd say I'd missed the boat in this one. I mean, it's not a long or short to me. It just looks like it's bumping up. You have resistance. It made the new high of the move yesterday at 47.71. Really not doing much off this. So just looks like it's going to consolidate here. I know the report's coming up.
Yep, tomorrow.
You had a high above this 47.97 on December 13th. But what do you like it? You like it, Dennis, here? I mean, that's at a big
Not
run.
here. And you know what? It's very conservative. And Cisco, it's a funny stock too. It does some funny things because for whatever reason, they don't sometimes trade it as a tech stock, and I don't know why that is. It's in the
it is
queue,
the tech stock. It is the tech.
What's that?
It's the tech stock.
I know. And sometimes they don't trade it as a tech stock for whatever reason. They'll trade, like when you see a lot of the techs rallying, a lot of times you'll see Cisco not participating. I don't understand it at all. I'm just telling you the way it goes, and the index arbors, for whatever reason, leave it out sometimes. And I don't understand why that is, because I do index arb, so I can tell you, I can tell from the algos that are running, you can see it all. The Cisco gets left out a lot of times. It moves with the overall market, obviously, still. But for whatever reason, it does funny things sometimes. It's a funny stock. And it's usually one of my worst stocks. I'm just not good at trading it. And that's probably because I trade index arb, and when you throw it in there in the basket, half the time it doesn't work. And it wouldn't have worked today because of the downgrade, but for whatever reason, it just does its own thing. It's got a mind of its own half the time. So it's one stock that I'll limit my opinion on because I just am not good at trading the stock.
And Cisco reports, just for awareness, tomorrow after the bell. So that should be on our radar for tomorrow. But that's it.
Cisco reports tomorrow?
Yes, they do.
Oh, I didn't know that. Oh,
you do
that's
now.
important to know too.
Yeah. So
now you know.
The more you know. Hey, that's it for today's show. If you missed any part of it, catch our podcast, iTunes, SoundCloud, Stitcher, Google Podcasts, and TuneIn. Please remember, all the information on our show is for informational purposes only and not meant to be investing advice. As far as tomorrow's show, we'll be joined by Tracy Schuchart, one of Joel's favorite guests, because she is a Michigan gal, if memory serves correctly.
No, she's not.
She's not a Michigan gal. Oh,
that's Tracy. You're close.
Oh,
it's
man,
close.
I'm sorry.
Tracy
okay,
Roniak.
Tracy Roniak was Michigan gal. All right. You got me on that one, but that'll be it tomorrow's show. She's a commodities trader. Anyway, that's it for us today. Everyone have a good rest of your day, and we'll see you hopefully on Wednesday.
Spencer, I just want to throw in yesterday I did that 3 to 4 p.m. spot. I'll be doing that again today right here on the same airwaves. Christian Fromhertz is going to stop in at 3:20 and give his appraisal of the market going into close.
Very nice.
Tune in here. I got some great responses from people in both chats. So tune in 3 p.m. Eastern Standard Time for more.
All right. Have a good one, folks. We'll see you then.